I want you to walk with me for just a minute. We're here in Warsaw, the administrative and financial heart of Eastern Europe. Capital flows freely through these buildings. Wealth is structured, protected, and legally enforced. But today, we aren't looking at Europe. We are looking at a system operating thousands of miles away. A system that dictates the price of your food, the value of your currency, and the sovereignty of an entire continent. I am not going to read you an academic report. I am not going to give you a political speech. I'm going to show you the architecture of a trap. I want you to look at the documents, look at the contracts, look at the names, because when you see the names, the illusion breaks. Nigeria holds roughly 37 billion barrels of proven oil reserves. It is a petroleum titan. On its coast, Africa's largest industrial project, a $20 billion, 650,000 barrel per day mega refinery, was just completed. It's a machine designed to end import dependency forever. Yet, as we speak, this exact refinery is chartering maritime vessels to import crude oil.
Over 1 hour journey on the Atlantic Ocean is destined for a large vessel, MT Otis, which just arrived from Bonny Terminal. It's the second voyage of the vessel to the Dangote single point mooring SPM. The vessel has on board a cargo of about 1 million barrels of crude set to be discharged to the Dangote refinery.
From the United States. Let that sink in. A $20 billion refinery sitting on the edge of the Niger Delta, importing crude oil from Texas. Why? Not because Nigeria lacks oil, not because the local wells are dry, because the oil does not belong to the people who need it. Who controls access? I'm going to show you. If you value investigations that expose the structures governing your reality, subscribe to this channel and hit the like button. It helps us bypass the algorithm, because the more people who understand how these systems work, the harder they become to enforce in the dark. Let's start with a foundational question. If Aliko Dangote needs crude oil so badly to run his machine, why doesn't he simply go to the Niger Delta and extract it himself? He is the wealthiest man on the continent. Surely, capital buys access. Look at this photograph. This is Oloibiri. Well number 1. The year was 1956. This was Nigeria's first commercial oil discovery. It was drilled by Shell Darcy. For 2 decades, this single well pumped millions of barrels of crude out of the earth. Where did it go? It was exported. Raw, unrefined, and cheap. What is left today? Nothing. The well is completely dry, a rusted piece of metal sitting in an impoverished, polluted region. Oloibiri is empty today because extraction without value addition leaves nothing behind. That is the historical blueprint. Pump and export. The global supply chain relies on Africa remaining an exporter of cheap raw materials and an importer of expensive finished goods. So when a Nigerian industrialist attempts to build a domestic refinery, he is not just building a factory, he is attacking a 60-year-old structural paradigm, and the system fights back.
Dangote cannot simply walk into the Niger Delta and drill, because the active oil blocks are already locked up. They are leased, they are contracted, they are controlled by systemic gatekeepers. So he built a machine to buy the oil instead, a 650,000 barrel per day behemoth. But a machine needs fuel, and right now, the system is starving that machine. To understand how, we have to look at the capital stack. Let's ask the next question. Who actually owns this refinery? Who really controls the leverage? You think it's just Aliko Dangote? Look at the cap table. Look at the shareholder structure. In 2021, the Nigerian State Oil Company, NNPC, announced a strategic move. They were buying a 20% stake in the Dangote refinery for $2.76 billion. On paper, this was presented as a victory for sovereignty. The state promised this equity stake would guarantee an uninterrupted supply of 300,000 barrels of crude per day. The logic was simple. If the government owns a fifth of the refinery, the government will ensure it runs. But look at what happened next. Look at the financial filings. NNPC could not pay the balance. Their stake was quietly reduced from 20% down to just 7.2%. They defaulted on the agreement, and when the state's equity dropped, the state's leverage vanished. The guarantee of domestic crude evaporated into thin air. Now,
Follow the money. Building a $20 billion facility requires immense financing. Look at the syndicate of lenders: Access Bank, Zenith Bank, Standard Chartered. This debt is not abstract. The interest rates are crushing, and crucially, the debt must be serviced in US dollars. Do the math with me. To pay the dollar-denominated debt, the refinery must sell refined fuel. To sell refined fuel, it must secure crude oil. But the local crude is being blocked by the gatekeepers. So, what is the mathematical outcome? The refinery is forced to buy expensive American WTI crude, charter transatlantic ships, pay exorbitant freight rates, and burn through its dollar cash reserves just to keep the machinery from seizing up. Look at the news right now. Why is Dangote actively trying to sell a 12.5% stake in the refinery? Why is he flying to London, looking for family offices and foreign investors to buy in? He is selling shares because the system is squeezing him for liquidity. The structure is bleeding his cash reserves. He is fighting a war of attrition. And the global supply cartel is simply watching the clock, waiting for the debt to break him. Who is this cartel? Let's look at the documents. Look at the August 2023 contract. Codename Project Gazelle, a $3.3 billion resource-backed loan.
The Nigerian state oil company needed cash to stabilize the collapsing naira. So, they pledged future oil production as collateral to a syndicate led by the African Export-Import Bank. They pawned the crude before it was even pumped out of the ground. But Afreximbank does not refine oil. They are a bank. So who actually takes physical delivery of this crude? Look at the off-takers in the contract. Look at the names: Vitol, Trafigura, Gunvor. These are Swiss commodity trading giants, Geneva-based entities that control the flow of global energy. Under Project Gazelle, 90,000 barrels of Nigerian crude per day are legally committed to these foreign traders for the next 5 years. The oil was legally sold to Geneva before the Nigerian refinery even turned on its lights. The resource did not disappear. It moved. It moved from Nigerian sovereignty into the accounts of international creditors. But wait, you might ask, what about the international oil companies, the IOCs? What about the oil pumped by the majors? This is where the structure becomes explicitly visible. Look at the law. Look at the Petroleum Industry Act of 2021, Section 109. The law legally mandates that crude oil producers must supply domestic refineries before they are allowed to export. It is written in black and white. So why isn't Shell supplying them? Why isn't ExxonMobil, Chevron, TotalEnergies, Eni? If the law mandates local supply, why is the local refinery starving? Because the system possesses loopholes designed by high-priced lawyers in London. These international oil companies do not sell their Nigerian oil directly to the Nigerian market. They route their Nigerian oil through their international trading desks located in London, Geneva, and Rotterdam. When the local refinery asks for oil, these trading desks don't say no. Saying no would violate the law. Instead, they simply demand a premium. Look at the pricing structure. They ask the local refinery to pay $3 to $6 per barrel above the global Brent benchmark price. Let's translate that into reality. For a standard cargo of 1 million barrels, that is a $6 million penalty, a $6 million tax imposed on a domestic refinery simply for attempting to buy its own country's oil. Or, the trading desks use another tactic. They say, sorry, this month's cargo is already promised to buyers in Asia. We have no available spot liquidity. Why do they do this? Are they evil? No. Do not look for morality where you should be looking for incentives. Their incentives are tied to global profit margins, arbitrage, and offshore tax structures. Their mandate is not Nigerian industrialization. Selling to a local refinery gives them no leverage. It gives them no logistical flexibility. Exporting the crude gives them total control. Control of supply creates leverage. Leverage creates bargaining power. Bargaining power creates profits. And what happens to that exported oil once it leaves the shores of West Africa? Trace the next layer. Look at the direct sale, direct purchase contracts, the DSDP agreements from 2019 to 2023. Raw crude left Nigeria on massive vessels, and expensive refined gasoline came back. Look at the names on the fuel import contracts: Mercuria, Vitol, Glencore, a multi-billion-dollar fuel importation cartel. I want you to map this ecosystem in your mind. Think about the mother vessels anchored offshore. Think about the smaller shuttle vessels ferrying fuel to the ports. Think about the tank farms in Apapa. Think about the insurance brokers in London. Think about the import license holders in Abuja. This entire multi-billion-dollar economy relies entirely on one thing: the absence of domestic refining. If the Dangote refinery succeeds,
The import cartel dies overnight. The foreign shipping fleets lose their most lucrative routes. The Swiss traders lose their highest margin arbitrage plays. The political middlemen lose their exclusive import licenses. The banks lose their letter of credit fees. The survival of the import cartel requires the failure of domestic production. So, the system resists. It starves the refinery of local crude. It forces the refinery to bleed its dollar reserves on American imports. It forces the owner to sell off his own equity shares just to service the debt and keep the lights on. It is not a conspiracy, it is a structured defense mechanism. I want you to feel the weight of this, because the facts are painful. The oil never disappeared. Access did. The resource stayed in the ground. Control moved to the trading desks. When you look at the inflation destroying the purchasing power of the average citizen in Lagos or Port Harcourt, when you look at the currency devaluation, when you look at the young professionals migrating because the cost of living has become mathematically impossible to survive, do not view these as personal failures. Do not view this as random bad luck. Trace it back into the structure. The outcome is predictable because the contracts are operating exactly as designed. This is not a story about one billionaire trying to protect his monopoly. This is a forensic blueprint of how global resource extraction actually works in the 21st century. A country can hold the legal titles to the land. It can dig the wells. It can build a $20 billion machine to secure its economic independence. But if the state oil company defaults on its equity stake, if the sovereign debt agreements pledge the future output to Trafigura, if the international oil companies legally route their supply through Geneva, if the domestic refinery is forced to pay a $6 penalty for its own nation's oil, then the nation is merely a bystander in its own economy. The minerals are valuable, but the contracts are worth even more. Resources create potential wealth, but contracts determine who actually captures that wealth. And history repeatedly shows us that ownership means absolutely nothing when someone else controls the gate. Who holds the keys to your country? Power is not given. Power is legally structured, violently defended, and ultimately, it is taken. I want you to take this video and send it to one person. Just one person who still believes that poverty is an accident and that nothing in this world is connected. Show them the structure. This is historic capital. Like, subscribe to this channel